Let's welcome in Mark Mahaney. He is head of internet research at Evercore ISI. Mark, good to have you on. Why Amazon? Why the move? Why now?
Well, because we've got two product interested in two ways that the narrative could change on a stock, and then you've got a PE multiple that it's at a record low for the name. So that's the interesting setup for me. It's at 25 times earnings. I think that's the cheapest multiple you've ever had a chance at looking at Amazon at. Here are the two product catalysts coming up. We got a Kuiper launch, so this is going to be a long-term build. Actually, really intrigued by Amazon's ability to succeed in broadband satellite internet access. I think there's a really interesting market that Starlink has showed us. And then you've got Alexa Plus coming to your Alexa device, and there's 600 million of these worldwide. So I think there's a kind of an interesting Trojan horse out there that could get Gen AI'd and become a lot more useful. And then in terms of the narrative shifting, I'm particularly intrigued by the ability of AWS, their cloud business, to reaccelerate in the back half of the year. I spent a lot of time with private companies here in San Francisco in the Valley, and we're seeing just dramatic growth rates for some of these private companies in terms of ramping up their revenue, and that at the application layer. And I think AWS is the company that those app runners are most relying on, and I think that's going to start showing up in the numbers. And if you get an acceleration in the highest margin business at Amazon, that's a good thing. You want to buy the stock ahead of that. So yeah, that's why it's our top pick here. Best risk reward, I think, in large cap tech.
Do you want to point out that on a macro level, the NASDAQ is at session lows right now? We're down 2.75%, nearly 3%. Last time I checked, 91 of the NASDAQ 100 were indeed lower today. So broad-based sell-off. Mark, I know you're not like a macro markets guy, but Amazon's a massive part of it. It's in hundreds of different ETFs. What do you think is going on right now?
Well, we started the year, Brian, coming in with multiples valuations that were reasonably full. I looked at the internet space I cover, and there really was very little dislocation. There was only one DHQ, dislocated high quality name. That was Uber. That was our topic at the beginning of the year, and it's surged 25%. But the other names, you really had valuations, and then you printed December quarters that were good, better than expected, but the March quarter guidance for most of the names, for a variety of different reasons, was a little soft, a little mixed. So there really wasn't an incremental reason to buy the stock. And now for some of these names, like Amazon, that does have some tariff exposure. I think they've hedged it pretty well, but that is a fundamental issue for or anybody that's working cross-border. So yeah, you've had a couple of issues like that. I think that's kind of a technical or macro
valuations, Mark, we're simply. You think? I'm sorry to jump in. Valuations, you think we're simply too high, given the guidance?
I think valuations were full, and that's how I'd phrase it for most of the stocks. Again, there are a few exceptions here, but for the stocks to keep going, if estimates didn't move, you needed to have clean beat and raise quarters for multiples to expand. I looked at these as quality compounders, stocks that would go up on the earnings growth, not on a multiple re-rating. And you've had nothing but a multiple de-rating, or especially in the last week or two. I think that's called a little disturbance.